other monitor so I can see the chat. All right. So gold was a little bit confusing just because of the fact that we had these lows marked out, these lows to the left, and also these lows as well. I was under the impression that we were gonna take these lows just because of us coming into these areas, trading above these areas, inducing buyers, but that wasn't the case. So I wanted to go over that because I know it could have also confused a lot of other people too on why we didn't short. But sometimes it's just the attention to detail. So I kind of went against what I was looking at from last week because last week I was emphasizing that if we keep seeing the market induce sellers off the back of price of action from the left, we can only infer that we should go higher. So remember how I framed out we induce sellers from this area here, and then we've been trapping sellers ever since. We trap sellers and then we take liquidity to the other side, inducing sellers again. Sellers induce, so then we would look to the highs, trap sellers again. So then it's the same thing on this scale. So now that I look at it, I wasn't framing it out pretty clearly because then again, this is kind of intricate to see. So if I can say what is my area reacting off of, so after we trap sellers, we ended up taking internal as well, that being here. So we ended up taking that internal point, inducing sellers. So after we induce sellers into the market, we form our liquidity block. So since we form our LB, give me 1 second. I'm over here multitasking real quick. Okay. The chat. Let me see the chat. Okay, cool. Oh. So you guys said you can't hear. If some people can hear and you can't hear, just exit your Discord and come back in. If you can't hear, exit and join back. But okay, because it's recording, I'm gonna just keep going. So we induce sellers from the left by taking out this internal point. But I never looked at what we were reacting off of, like why we induce sellers. So if I framed it out, it would have been this area here from the left. And why would it have been that area? So this is just a buy to sell wick. See how it pushes up and then pushes down. Price has been reacting from that area, which caused that sell-off to the downside. So before I didn't frame this out, then I would have known that we would have had an inducement from the left. So knowing that, my bias would have still been bullish regardless of whatever's going on in this PA, just because of this is inducing traders to go short. So we induce sellers, right? Create that LB to the downside. The same price action we went over last week. So here's the real key here, and it's just the attention to detail when it comes to these things. So remember how we took out these highs, the inducement high. Yeah, we took out that high. So we have to frame out where did we induce buyers from. So since we know that we induce buyers after taking that inducement from that inducement high, we have to frame out where buyers were getting in from. So from this low to this high is where we had that push up where buyers were getting in the market from. So any buys above that low was essentially with retail. So that area was essentially a trap. We should not be looking for buys above our inducement low. So we have that inducement low. And what do we have on the left of it? Our LB. So what we essentially did was this push up would essentially engineer liquidity into the market by forming that inducement low, since there was none to the left. So therefore what we get here is we induce sellers by taking out the inducement low, then we form our new LB. We form our new LB, and then we start to have price action to the upside. We have this inducement high area here. We start having some sort of build up there before we take it out. We build up. I think it's just on your end, guys, because if you're not hearing me, then it's something to do with you. Because if everybody else can hear me, then it can't be me. So we take out the inducement high, right? But before we do it, notice how we had this pause here. So we had that pause, and then price also induces sellers by taking out this internal point here. So price takes out that internal point there. Let's go on to 15 to make it a little bit more clear for you guys. So we take out that internal point, and then price pushes up. So now that we've taken that inducement high and induced buyers, we know that we have a BOS in the market. So we don't want to be buying with retail. We have to frame out where retail is getting in long from. So since we're framing out where retail is getting in long from, we have low to high. That is where we've induced buyers from. That is where we're going to frame out our inducement low now. Drag it out to the right. Notice how we have price action return back to these areas. And you see traders start to buy from these areas. So we get that reaction up, taking out this build up. Price respects this liquidity block. This is also a potential entry, but in my case, it's very aggressive. It's counter bias, but if it's the system, regardless, if it's the system, because you have LB here, you have inducement high, and you have a build up. So that's a potential valid entry that you could take, but a scalp entry that you would need to only take towards the inducement low. Yeah, guys, if you're using the website, try to use the Discord app. That's probably why you're having that issue. Okay, so you have a potential counter bias move. With that being said, LB build up, and we also have opposing engineered liquidity. Why do we have opposing engineered liquidity? Because we respected this area and we moved away. Notice how we moved away, inducing buyers, taking it above this build up area. So, whoops. Alright, so now we've traded below inducement low, and we've induced sellers into the market. So now this is pre-FOMC. You know, we get that sort of rangy price action. Price stays below this high, and then we tend to get some sort of weird price action in between. So before we have that push down, right, we respect these lows. We respect these lows, which is important now. We respect the lows first, then we raid these highs. Notice how we raid these highs. Notice, I'm gonna make it a little cleaner. We respect this area that price has been respecting from. Oh, we also actually take it out. So, when I say we take it out, we take it out, inducing buyers, right? But we're still respecting this area from the left that traders are shorting from, right? So now we know, hey, we've induced sellers, right? But we've taken out this internal point, but we failed to take out this area here, right? We failed to take out this area, and this is where sellers are getting into the market from. So if we already trapped buyers here, we don't want to be taking shorts after this high has been taken. So once we frame it above this high, buyers have been induced. Buyers are looking to buy from that area. They get trapped. And that's FOMC move. So if you drag this alt to the left as well, what can you say here? What would this be? So in a sense, you would be asking yourself, okay, why has price reacted off of this level 1, 2, 3, 4, 5 times? What would that be? That would be my inducement from the left. Notice how we had all these reactions off the back of just this candle area. This candle area is causing traders, early buyers, to be buying this thing. Just drag it all out to the right. So whatever you want to see, support, OB, early buyers are buying this thing. So what do we also have below it? We have our LB. So since we have our LB, and also look at this, now that we've induced sellers, we have opposing engineered liquidity. So this is high probable. This is high probable conditions right now, right? We've induced sellers. We've taken out all the liquidity trapping buyers by taking out inducement from the left, leaving engineered liquidity at the highs. And we have a LB below. And on a higher time frame as well, we have opposing engineered liquidity. And we have an inducement from the left target on a higher time frame as well. Remember, why did we have this sell-off off the back of that area from the left? So, sorry. That right there is where you would essentially be buying from. FOMC. So I feel like the people who trade CFDs would be able to take this trade, but if you're a futures trader, you wouldn't be able to hold this at for long at all, really. You'd probably just only be able to take it to these highs. But nevertheless, if you're on CFDs, this is a potential swing entry for you. Target the inducement from the left target. Take partials along the way. So let's keep framing out this price action that we start getting. So we react off of this area, yeah? Notice that since we've induced sellers after taking out all this liquidity to the downside, we should have false reactions from these other levels, right? You may see this as a LB, yes, but at the same time it's a trap, because what did we do? From that high, right? To this low, sellers were induced. So anything from the left should be false reactions. False reactions. Boom. We tag right into that area, right? And notice how what we did here, right? Let me frame it out a little bit cleaner. We had a pause. We induced higher. Tagged into that area. And then we came to the low. So we induced sellers off the back of that area. But there's still nothing to frame out yet. Nothing clean to frame out yet. And this is nothing to do with our times that we be trading. So let's keep going with price action. So we also take out this candle's low here. you could say this was reacting off of there. So it's a little squeezed up on the 15. Go to the 5. So that candle here, we reacted off of that area and then we traded higher. So that induces buyers into the market. They're trapped. This whole area here is an LB. So since this whole area is an LB and we could potentially see a reversal from that area, I would like to see some sort of price action form where, we induce higher and then we trap buyers. So let's frame out our inducement high right now, right? Just framing out our liquidity points so we can get a, idea of where we want price to trade away from or trade to, So from this high to this low, we induce sellers, trapping these buyers. So since we did that, drag that high out to the right. That's going to be my inducement high. So I want to see price react off of this, create some sort of build up for us, So we react off of that area. And since, remember, we also induce sellers. Sellers are getting into the market from this area. Just because we've taken out this a little structural point before that doesn't mean I want to be selling from this area. It just doesn't make sense. So to add logic to it, we traded above this area after trading to the downside. Have a BOS to the downside, BOS up. So notice how we have this price action where we start to trade above highs, right? And then we respect it and move away. So notice how we have that BOS to the upside, respect this area, BOS up again. So that just lets you know retail's buying this thing. So since we know retail's buying this thing, we do not want to be buying above the inducement high. Above the inducement low, I'm sorry. So right here what we have is price takes out this build-up area. So since we take out this build-up area, what we notice is we have liquidity to the upside because we reacted off of this area. Buyers are still trying to buy this thing. So we have that reaction. Price induces buyers off that reaction, which is important now because now that we solidify our build-up area here. So that lets us know as liquidity traders that, hey, retail traders are buying this thing. So we take out that area. And then we have this push up. This push up, all it does is take out internal, but we're still respecting this area that's inducing sellers, which is important as well because one, this is building liquidity for us. This is engineering liquidity for us in the market. So since we take out this internal point that price has been having some sort of buildup at, and we react to this extreme, we induce buyers taking out that internal point. So we do not want to be buying from this area because we've induced buyers by taking out that internal point and we reacted off of this area. So now this area gets trapped and this would be our inducement low. And what do we have on the left of us? Inducement from the left. This is our inducement from the left because look, this is where buyers originally started buying from. This is where buyers originated from. This candle, you see how price traded up? Very intricate, but notice how we trade up and then we return back and then we start having this sort of bullish price action after just returning up. Basically, that's what that was. So we have an inducement from the left and we have LB here. Well, let me frame it out with the curve. Because we've traded below these lows. So we have LB here, inducement from the left. And then we have all this liquidity to the upside. Why? Because all this is doing is just engineering liquidity to the highs for us to trap them. So essentially, in a realistic market environment, I'd be buying from here as soon as buyers would be trapped. Because at the end of the day, like in live conditions, you may not see this inducement from the left, or it may not get tagged. It just may not get tagged. So, and 9 times out of 10, I'd always take this entry just because, we have that induce up and then we trap buyers. So that is the entry that I like to see, and it's more conservative in my opinion. So take that entry, stop loss below the LB. Like I said, you could be framing it out as a swing position because we have higher time frame liquidity targets. We have this area that we've induced sellers from. So that's one target as well. You have a partial point here. You have another partial point down here. But me personally, since I see this as a potential high time frame trade, I'd break even above this price action down here. I'd break even above this. But any other price action would be potential partial points. So above here, this is just a 1 to 11. I would say take off like 50% of the trade. There's no point in being so greedy. And if you can hold full volume, hold full volume. But I like to take money off the table whenever it's realistic. And then we have that inducement from the left target there. Let's just frame that out. Just frame that out. Remember what we've been reacting off of, this whole area that induced sellers. You see how it looks the same every time, right? Let me keep dragging this out for you. We react off that area, induce sellers again. It just looks the same, like not pattern like, but when you add the logic to it. And notice how we get that similar price action here. We react off that level, induce sellers, and then we have that build up type price action. So then we start building up. I don't think there was anything in this price action. We just start building up here and reacting, and then we just blow through those highs. So gold showed pretty nice opportunities for bullish price action. I kind of misread this direction this week just because I kind of changed my bias, because I was very enticed that these lows would be going. That's why we can't look at the market or look at it with our strategy from a pattern perspective, because then we'd start to negate the logic of, hey, we swept this low, which created that as a liquidity block, and this would have been our inducement low. But instead, I saw all this as potential liquidity. So that's why we have to just, frame out the logic of the strategy. Let me start to answer these questions. Can I call this inducement high and an inducement from the left too? Is it different? Yeah, essentially it's different just because of, well, it's not different in a sense, but it's the terminology, I use it like that just because of the fact that it makes it easier to understand, right? So my inducement high, right, would be what's inducing traders right now, like what's inducing me to go short right now. And my inducement from the left would essentially be what is price causing that inducement high to be. Let me make an example for you. So if we have like price action like this, right? And then we short, right? Essentially this would be my inducement high. Because why? From that high to that low, we've induced we've induced lower. So that would be my inducement high. And then why did we have this short from this price action to the left? So essentially that would be my inducement from the left. And that would be my inducement high. I struggle a little bit with this LB. I'm not sure if I understand it correctly at 42.30. 42.30. No. I can't blame you because that LB is very intricate. It's kind of hard to see. So why I picked that was because of this. So remember this whole area to the left. After we've taken out this price action to FOMC, this whole area is the LB, right? So since this whole area is the LB, we can understand that we just need to see some sort of build up price action form from on the right side for us to potentially go higher. So notice how, and also LB is not going to always be the prettiest as far as like just it's not always going to be just a prettiest boom. It's not going to always be that clean to where you're not able to frame it out. You see how like this area, let me frame it out for you guys. You see how like this LB doesn't look as clean? I'll show you another one. This one doesn't look as clear as well, but it's still a LB. The logic of it, remember, we have that build up before we trap buyers and we form that LB because we induce sellers. Same here. Notice how, we have that build up before we trap buyers and we induce sellers. LB. It doesn't have to be the cleanest. It's not going to always be just a down close and up close candle right after. It's the logic of it. So here, right? What we get. To frame it out a little bit easier, notice how we keep trading below these lows, right? So we keep trading below these lows. Very intricate, but still the same idea. We trade below this low. And then we have all this build up price action that keeps going above. And then traders essentially get trapped. All those early buyers get trapped, and what do we have below? LB. Sometimes it just takes a little bit more of seeing it in repetition to be able to see like these very intricate ones that it's kind of hard to spot. Second trade on gold, why not entering after the first inducement low was taken? Oh, are you talking about this one? Let me see. Are you talking about this one right here? Because if you are, essentially, yes, you could have taken this entry. But this is just not in my time window. You feel me? This is like 6:55. So I wouldn't have been awake to take this entry, for one. But I'm not saying it's not valid. If you were to take this entry, if you're up at that time, I would be having my stops still the same below here. But, it's valid. But this is the higher probable entry because we induce higher and then buyers get trapped. So we have that last trap move before our entry. What should be the entry criteria when LB is printed? So we talk about this in the course content a lot. We just want to see some sort of build up print after our LB. So essentially like how you're seeing, right? Let me go to the 1 hour. Sorry, surely all that liquidity to the left. Liquidity left to the downside would mean we are going bearish next week though, right? I can't possibly tell you that for sure. I don't want to be the person to, frame out my bias and then you're trading off of my bias, So like I said, like sometimes that happens to us because remember I came to the market last week with a mindset of we can still continue going bullish off of this price action because we've induced sellers, and then we still are continuously inducing sellers. But right now, sellers have been trapped after we've taken out this inducement from the left. So personally, I don't have a bias right now on gold, but we could still potentially be going higher, yes, but I don't want to, I have no price action to work with right now. There's literally no price action for me to work with. So I can't tell you where we're going. What am I anticipating for next week? I don't know. I honestly don't know. I can't even lie to you. What should be the entry criteria? So entry criteria is always the same, when we print that LB, let's go back. Let's have this marked up. So you see how we induce sellers here, right? Sellers have been induced. We print that LB. What we want to see is some sort of build-up. What do we get? We want to see a build-up, and we want to see early traders get induced into the market. And this is probably like high probability entry criteria right here that we're looking for. So, yes, we induce higher, but off the back of early buyers getting into this market. We have this inducement low here. Boom. Basically what you want to see, right? So you want to see that build-up form. After we print out LB, we get this move taking out this high to the left, which induces early buyers into the market. And then we get this build. Notice how we respect this area and start moving away. We start inducing buyers off of this area as well. Engineering liquidity. And then they get trapped. Boom. That lets us know we want to be buying from this low. LB, inducement low. Now we have opposing engineered liquidity once we trap buyers. Once we trap these early buyers. And then that could be applied to the sell side of the curve as well. Same thing, really. Would you already be break even when the first high is taken for the trade? I would be break even once we took this high. Once we took this high here. This would be my potential break even point. Above this inducement high. Right here. Let me just sip some water real quick. Internal liquidity was taken on the far left before it dropped on Friday. Yeah, this was taken. Oh, this is Thursday, sorry. Oh, you're talking about this, yeah. Yeah, I seen this. I seen this whole move down. Yeah, I mean, could potentially frame something out whenever we get more price action. We even do sellers. But we'll see. Price could easily respect these areas and keep shorting, so who knows. I need more price action to work with. But that's gold. So let's go on to some, more interesting pairs. We got NQ. NQ's been a little funny this week just because of us. We took this high, right? But we failed to take the inducement from the left. So a lot of traders could have got tripped up by trying to force their hand at buying this thing. So whenever you're in a scenario of, okay, we take the inducement high, but we fail to take the inducement from the left, like I mentioned before, buyers have been induced by once we've taken out this high. So you kind of want to see price action, go the other way just so we can engineer liquidity at these highs. Because essentially, if you're trying to buy after buyers have been induced, you're essentially buying with retail. So the best thing to do is just wait. Wait for buyers to get trapped. So now, essentially, we still have those highs intact now. We still have the inducement from the left intact. So now we can now focus ourselves on buys. But let's look at that price action beforehand, because this was some ugly PA. Okay. We have Monday. So Monday, here's what we have, right? And we're going to stay on a 15 minute so we could be able to spot this liquidity very easily. So we're reacting off of the back of this price action here. We had that BOS up. Just simple liquidity tracking. We respect that area, respect the extreme, take out some sort of internal here, which induces buyers. LB there. Traders get short. Boom. Sellers get induced there. And then now we formed LB to the downside. Sorry. But we got to factor in this. This price action here is being respected by this area to the left. So that lets me know I don't want to be buying, above this, just because I know that this is essentially a trap, because this is all you see right here. Let me show you framing it out on a diagram perspective. Up, and now we're just getting that price action down, right? So I don't want to be buying above this low. So we take out this low, and then what we do, we take out this build-up area that's left for us. Why is that a build-up area? I'll show you right now. Look at how from this area, right? We trade below this low, and then we trade right into that area, respecting that area, and then we short off. So that lets me know we have a build up here. Build up gets taken, buyers get induced, BOS in the market. So then what do we do here? We take out this internal low. Internal low gets taken. We even do sellers. Then we come for this inducement high. Traders get short. Valid entry. LB. Opposing engineer liquidity to the downside. Nothing I would take, just because look at the time, it's 3:15, but it's per the system. So you can easily frame it out, like if you're forward testing, back testing. This is trades that, fit the system. Potential short. You take out that inducement high. And then we have this low. Remember, we induce buyers by taking out this build-up area. So we don't want to be buying from this area. You may see it as a LB, but once we induce buyers, that LB should become a trap. So buyers get trapped, sellers get induced. So now we can see that this area would essentially be liquidity now. Now we get price trading above this area. Get that BOS. And then we see... Oh, sorry guys, 1 second. Okay. Now, price trade below these lows. After we traded above the highs, inducing sellers. And then we have this price action that just respects this area. We respect that area, trade again above this high, inducing buyers. And then we just have this price action is just not the best. We just trade above this internal point, forming this LB. So we form an LB. We induce lower, right? We induce lower by taking out this low. But remember, we had that BOS from the left, from this low to that high. We had that BOS in the market. We don't want to be buying anywhere above this, So we can frame that out. Once we took that internal low, what do? We reacted off of this area. Classic Da Vinci. Why? Now we're building liquidity to the downside. And what do we have here? Internal liquidity here. As soon as we get that market open, trade above that inducement high. There's your LB. And then you target that low. So there were two kind of shorts there, some short-term shorts there. Then price goes parabolic after you take these lows. You went long after 25,382, 25,382. Oh, we're getting there. Okay. So we ended up taking this low, but remember, buyers have not been trapped yet. We don't want to be buying, anywhere above this because it's with retail. Remember, we had that, staircase price action above. So we ended up taking out this high. Very funny because we still haven't taken out the inducement from the left. Yo, this magnet tool is terrible. I can't even lie to you. Okay, so we trapped these sellers here on the left. Sellers are trapped. But we haven't taken out all the liquidity, which is our blue line here. So since we haven't taken out all that liquidity, we can still see some sort of, rangy type of price action. So since we get this move all the way up and then we just short all the way down, trapping these buyers now. So now these buyers are trapped. So now we could potentially look for longs. So here's what we get. We get this price action of, we take out this inducement high. And then I've taken this long, but I wasn't able to hold it just because I wasn't by the charts for a while, and I kind of closed early on other accounts. But the account that I held on, I just let it go to market close. So I had this framed out. I wanted to see price below these lows here. Basically just, we induce higher, then we induce lower. So we have this build up here. We have this LB here as well. My intentions were to target the inducement from the left. But I was only able to capture, what time did market close? That's the only price action I was able to capture. So around 4 o'clock was where I was out at. So right there. So I was only able to capture like a 2.9R. So nothing special. Tagged out at that time. So then price comes all the way above here, right? So now we've taken that inducement high there. Why is that my inducement high? So if you look at it from a larger scale, we have this LB. Still a LB, yes. I know we didn't take out this liquidity point here, but still a LB. Could see some sort of false reactions, yes. So frame it out. So we get this. Let me not confuse you guys. From high to low, we induce sellers. That whole impulsive move down induces sellers. So look at how we get this like false reaction type of price action to the move, respecting these areas to before we take out this inducement high. So once we take out the inducement high, sellers are trapped, and now we start having to sell off to the downside. Now, when sellers are trapped, buyers are induced. So we do not want to be buying from this low anymore. We do not want to be buying from this low anymore. So here's what we get. Me personally, I sent you guys the end of the day. I wanted to see, some sort of price action to come above here. Liquidity block above there. That's what I wanted to see. But here's what we get. So let's frame out New York session. New York session starts here. But here's what we get. Sellers were induced here. Why? So we're reacting off of these candles here. Let me just clear this up because this looks ugly. Sellers were reacting off of price action that's in here. And all this is doing is just inducing buyers to get in this market. So we trade above this high. Sellers induced, sellers trapped. I'm not saying that, we couldn't have taken shorts from here. I was just framing out where I wanted to short from. So, in any scenario, we've taken out this liquidity point, but we failed to take out this here, my IFL, so my inducement from the left, which is inducing these traders to get short. So notice how, this is the reason why prices started to short. So this area I would want to be taken for me to take any type of high quality shorts, but in any case, we've taken out the inducement high. But we failed to take out inducement from the left. So price sees this as we induce buyers above here. We have that reaction. We have that reaction before we trade lower. And then price takes internal point and dies. Me personally, I wouldn't have taken the short because price could easily have just respected this area from the left and then just went up. I've seen it in many cases, so why is now the inducement from the left needed for a short, not just the inducement high? Because sellers would be trapped once the inducement from the left is taken. There's still seller liquidity above here, remember. So if I have this reaction off of the back of this area here, sellers are getting induced from this area. We want to be selling when sellers are trapped. Sellers being early sellers, retail, people, the other side of the traders that we're trading against. Or I don't want to really use that terminology because it's corny in my opinion, but per our system, let's say that. We want to be buying when early buyers are trapped. We want to be selling when early sellers are trapped. It's just the most high probability case, because why should we be selling when there's still liquidity here? We're still selling against the liquidity, not with it. So in any case, it's not high probable for us to take the short. Just like we wouldn't be buying, with the liquidity. Why would I buy this? Just because the inducement low is taken. Why should I buy this? We had that BOS in the market, This is my inducement from the left. It's inducing traders still to get in. Once you get like well versed with a strategy, you'll start to see what I'm talking about. Because look at this as well. Another example. This is my inducement from the left. Inducement low was taken. There were no real buy opportunities here. No real buy opportunities here. You maybe could have gotten this, but anything high probable, I'd say no. So therefore, that was really the week's price action. Not really nothing too special. I can't even lie to you guys. It's been a little bit confusing. I can't lie to you. As far as NQ goes, if you were trying to, trade this intraday price action. So that's why we like to, frame out a forecast on a higher time frame scale so we can actually, develop some sort of bias where we want to see price go. Because I'm telling you, you will get chopped up in those intraday price action levels. Why not wait for price to come at 25,683? That's just high, right? Let me see what you're talking about. This high? Oh, where I initially marked out? It is, yes. But since we had a reaction here, right? We had that reaction here, letting me know that, okay, sellers are getting into this position here. If we can see price come above here, I would not take direct entries, no, above the high, but I would look for some sort of confirmation entry, yeah. Because price doesn't need to come all the way above here. But if we have some sort of like confirmation where we take out this, we have some sort of LB forming now since we taken out that high. So that lets me know, hey, I could potentially look for some sort of confirmation, some sort of build up, whatever the case may be. That's why I wanted to take shorts potentially above here, because I didn't see like it'd be realistic after that price would come all the way above here. But that's really it. That's really it. That's all I have for you guys this week. Nothing too special. No problem, man. No problem. It just takes a lot of reps to really get over this. To really get over that hump of trying to figure out what we're looking at. How to build your bias. How to spot the liquidity. No problem, guys. No problem. Guys, I'll see you again next Saturday. Make sure you guys are studying. Make sure you guys go over the webinars. Maybe you'll see something you didn't see during this session. So I hope I'm doing, you guys a good service as breaking these down, articulating it well for you guys. So hopefully you guys, take value from this. Yes, the recording is gonna be uploaded to the WAP. For the course members, you guys have access to that. For the live call members, you have to upgrade to the course model for you guys to be able to access the recordings. Okay? Alright, guys. I'll see you guys soon. Have a blessed weekend. We're back at it Monday. Let's get it. Clean your charts, guys. Clean your charts so we could, frame out a new forecast. Don't come into the week with the same mindset you did last week. Clean your charts. Trust me. It helps. Alright, guys. See you guys later. I had a blast. Let's get it.